The last 2 years were crazy for everyone, with the pandemic affecting nearly every aspect of life. However, as the country has been returning to normal, it has also meant the end of a lot of COVID-era programs that boosted tax refunds over the last 2 years. As a result, many Americans will be seeing a much smaller tax refund this year. The average tax refund last year was $3,039, according to the IRS. That was up over $400 from the prior year, highlighting the impact of the COVID-era stimulus. But sadly, due to many of the new and expanded programs ending, tax refunds will be smaller for many. Even worse, many could find themselves owing taxes when they've never had to owe before. In this video, we'll share why there's a good chance your tax refund is gonna be smaller this year. Hey everyone, this is Andy Hill with The College Investor, investing and personal finance for millennials. If you're new to the channel and you like what you hear today, please hit subscribe so you're ready when our next video comes out. Thanks. First up is the Child and Dependent Care Tax Credit. The tax refund reduction could potentially be $5,000 to $10,000. One of the biggest expansions in tax credits came through the Child and Dependent Care Tax Credit. In 2021, so when you filed your taxes in 2022, there was a huge increase in the amount of the tax credit. The income levels were higher and the tax credit was fully refundable, meaning you could get more refunded to you than you even made. However, for 2022, this credit reverts back to the original rules, meaning millions of families nationwide will see much smaller tax refunds. Last year, the following rules applied. You could receive $8,000 for one qualifying person and $16,000 for two or more qualifying individuals. The percentage of the qualifying expenses increased to 50%, and the phase-out income started at 125K AGI and capped at 438K AGI. However, this year, the limits are much lower. The following rules apply for 2022, which will reflect on your 2023 tax return. You can receive $3,000 for one qualifying person and $6,000 for two or more qualifying individuals. The percentage of qualifying expenses is 20% to 35%, and there is no longer an upper limit for income to claim the credit. Taxpayers with two children who qualified could see a reduction of $10,000 in tax credits. That's $16,000 in 2021 and only $6,000 in 2022. Next up, the child tax credit, with a tax fund reduction of potentially $1,000 to $1,600. The child tax credit was another huge expansion to tax credits in 2021 that will revert back to their pre-COVID levels. In 2021, you could receive the following for the child tax credit. That's $3,600 for children 0 to 5 and $3,000 for children 6 to 17. Furthermore, some of these payments were sent out monthly, making the tax credit even more confusing last year. However, for 2022, the child tax credit reverts back to the original rules. $2,000 for all children under 17, and only $1,500 of the tax credit may be refundable. And you must have an AGI of 200K or less for single, or 400K or less for joint returns, or the credit phases out in $50 increments. The result of this change is that 17-year-olds are left out of the credit again. Furthermore, everyone else is seeing a reduction of $1,000 to $1,600 in the tax credit. Then we've got the Earned Income Tax Credit, or the EITC, changes. Tax refund reduction for this one could be up to $6,935. This could reduce the tax refund for young adults and other low-income individuals. In 2021, the EITC was expanded in two ways: the minimum age limit and the adjusted gross income limit. The minimum age to claim the credit in 2021 was 19, but in 2022, it goes back up to 25. And the maximum AGI for filers with 0 dependents is reduced from $4,950 from 2021 to 2022. The maximum credit allowed last year was, for folks with no children, it was $1,502. For folks with one child, it's $3,618. Two children, $5,980, and three or more children, $6,728. Furthermore, in 2021, you were allowed to use your 2019 income to boost the EITC, but that's not allowed in 2022 for tax filing in 2023. Now this year, the credit amounts vary. No children, $560. One child, $3,733. Two children, $6,164, and three or more children, $6,935. As you can see, this change will impact those under 25 and those with no children. In a worst case scenario, it could see a total elimination if you're under 25, or if you have no children, you could lose $942 in tax credits. Next up, no student loan interest. Tax refund reduction could be between $250 to $550. A popular tax deduction for the 43 million Americans with student loan debt is the student loan interest deduction. To claim this deduction, you must pay at least $600 in student loan interest during the tax year. You can only deduct up to a maximum of $2,500 in interest paid. The student loan interest deduction is an adjustment of your gross income. So if you earn $60,000 and paid $2,500 in student loan interest, you'll only pay taxes on $57,500. However, due to the COVID-19 student loan forbearance, federally held student loans have been paused for all of 2022. These loans have had no payments and interest has been 0%. As such, most Americans with student loans haven't paid any interest for the entire year. The result? You might not qualify to deduct any interest on your taxes, thus increasing your tax bill. Another one, the recovery rebate credit for stimulus checks. Tax refund reduction could potentially be $1,400. 2021 was the last year that could have been claimed for the recovery rebate credit, also known as the stimulus checks, which could have added $1,400 to your tax refund. You would have filed your tax return in 2022 to claim any missing stimulus check credits that were due from 2021. However, there was no federal stimulus checks for 2022. Next, self-employed sick and family leave credit with a tax refund reduction of up to $17,110. The Families First Coronavirus Response Act passed in March 2020 and allowed eligible self-employed individuals who, due to COVID-19, were unable to work or telework for reasons relating to their own health or to care for a family member to claim refundable tax credits to offset their federal income tax. The credits were equal to either their qualified sick leave or family leave equivalent amount, depending on circumstances. There were 3 different tax credits, up to $5,110 for sick or family leave for their own illness, up to $2,000 to care for someone with COVID, and up to $10,000 to care for children due to school closure. The last day to be eligible to claim this tax credit was March 31st, 2021. As a result, this tax credit was totally eliminated in 2022. For employed business people that were out sick with COVID in 2022, there is no tax relief to help offset lost income. In the end, depending on your tax situation, it's possible that you could be losing upwards of $18,500 in tax credits. While some of these are not going to impact all tax filers, many low and middle income families will see a sizable reduction in their tax refund compared to last year. It will be even worse for families that swing from a tax refund to potentially owing on their taxes. If you find yourself owing money to the IRS that you can't afford, be sure to speak to a tax professional. Beyond addressing your current situation, you'll want to resolve the underlying issues to avoid future unpleasant tax surprises. Thanks for hanging out today, everyone. This is Andy from The College Investor, and we'll see you in the next video.